All right, Navneet Daga and Ruchit Jain also joining us this morning. Mohit Gava also with us here in the studio. Gentlemen, good to have you with us. Let's the kind of upside we're tracking now, Ruchit. What are the kind of levels that you're looking at in terms of a move upwards for the markets from here?
Hi, good morning. Overall, we've seen that a good positive structure has been built on Nifty now, post Brexit gap which was there. Clearly, the upside momentum has been built up with gap up openings as well. And after that gap has been filled, the index is showing continuation of this positive momentum. So if you see the broader charts on the daily charts, then in spite of all the events that took place this week, the uptrend has been continued by formation of higher tops and higher bottoms on the daily charts. So I think this momentum would continue unless we get any signs of reversals on the daily charts. On the higher side, 8380 to 8400 I think would be the next resistance zone to watch. So at current levels, even at current levels, one should continue to trade on the long side for target of 8380 on the index.
All right, fair enough. Mohit, let's get your call as well.
Well, on the index broadly, we're just about breaking out above levels of 8300. However, we've seen 4 to 5 days of continuous up move, and it's been a strong upside. As long as we hold up above 8240, the bias is still bullish. However, I'm not too very bullish on adding fresh longs. So from a risk to reward point of view, is maybe not the best entry point. So continue holding longs above 8240, but maybe not add fresh longs.
Navneet, it's the first day of the new series. How are you expecting positions to build up as well? Just talk us through that.
Well, it's been an interesting series. The last series was what we have observed is there was the sharp period of very sharp increase in the vols or the volatility. That's a bouts of increase in the volatility. But now the period that we are going through, we have seen the global markets also stabilizing, as well as for India. What we have observed is there's a showcase of resilience. Even if you look at the VIX index as well as the options build up, there was a case whereby the dips were getting bought into, as well as once the market globally has stabilized, we have seen a run-up rally on the higher side towards a higher rollovers. Pictures, the Nifty, which has seen a rollovers of almost 77% and very strong hands have come into the last couple of days, and the FII data, which has been a very encouraging to say that these long hands might, these strong hands might the higher side, and somewhere on the lowest makes sense.
On the charts, the stock may look fine, but I was just going through some of the sugar stocks. I mean, there is a real issue about the debt they have. They haven't declared any profits for months. I mean, for quarters, consecutive 8-9 quarters. Some of these stocks have gone up by 1,000%. We were just talking about Dwarikesh in the morning. 48 crore market cap stocks are at 480 crores. Is this going to sustain, Ruchit? Because whenever these things build up like this, the implosion is massive, and just regular hapless individual investors get stock.
See, Ashu, what in sugar stocks, as a trader, if you are a short-term or medium-term trader, you need to follow the trend. If we observe the longer-term charts on this, these are basically cyclical stocks, wherein when the uptrend is there, they move far beyond. Even if you see Balrampur Chini, if I just take for example Balrampur Chini in 2003, the stock had rallied from 12 rupees to 180 rupees. Similarly, after then it corrected sharply from 180, again it came to 30 rupees. After that, from 30 rupees, in 2009, it rallied up to 150 rupees. So these are cyclical moves, wherein moves generally in sugar sector, or you say tea, coffee, these commodity sector, they move for a long period of time before they get reversal signs. So unless there are any signs of reversal, I think this trend could continue further on the upside, and sugar stocks could further give higher returns from current levels. Definitely, as you have said, if you are an investor, then from valuations or other from the net profit level perspective, there could be a concern. But from trading perspective, I think that trend is still up, and unless we see any sort of reversals coming in, I don't think that we would see any kind of fall immediately. Definitely need to go more stock specific now rather than adding up any of the stock in this sector. Balrampur Chini still looks good on the charts. On the higher side, the stock has potential to go up to 150, 160 levels also. So I think you need to go stock specific now rather than going long on entire sector as a whole.
All right, so that's the sugar space. Let's also take a look at some of those other names that have been buzzing. We've been tracking, of course, housing finance, real estate, cement, that entire pack as well. Mohit, let's get your take on some of those pockets.
Well, talking about the financials, there are a few that have given fresh breakouts yesterday. So Shriram Transport Finance is one that's broken out pretty strongly yesterday, and we could see levels of 1240 to 1250 next on this. So this is a buy with a stop loss at 1180. Also, in terms of other financials, City Union Bank is looking really good in the charts. It's seen a fresh breakout trading at all-time highs. We could see levels of 125 next year. So this is a buy with a stop loss at 112. M&M Financials is also one that's looking good in the charts. We've seen it's been a strong uptrend, and this up move can continue towards levels of 345. So this is a buy with a stop loss at 328. And Bajaj Finance lastly is given a fresh breakout after days of consolidation yesterday. This could move up to levels of 8200. This is a buy with a stop loss at 7900.
With a number of stocks that I wanted to just bring up, can you bring up GMR? Because it's interesting, all of a sudden it went down to about 10 or something. It's gone up about 30% in the last few. So it's close to a breakout. Also, let's bring up this stock, City Union Bank. And we'll also look at Reliance Communications and BHEL. City Union has a very clean chart, cleaner than, and here's Reliance Communication, maybe making a small breakout from a channel at the moment. Here's BHEL for you. So BHEL also seems to be close to a breakout, and actually the candle structure, which is the opening prices higher than the closing prices, was pretty good. Then Khaitan Electric, I don't know what they do, but anyway, that stock's been on a freeze for quite some time. So we'll put that. Just look at the candles. I mean, the opening prices are way higher than any of the closing prices. IVP. Once again, I'm just giving you the technical structure. I am not getting into the merits of the stock. Giscol Alloys, GYSCOL, Giscol Alloys, and we can also bring up Uttam Galva and Shiva Texian. Just on technical structures, Mohit, your thoughts?
Well, we'll start off with Credit Union. City Union Bank was a buy as we speak, because it's looking really good in the charts. It's trading at all-time highs, like I said, and we could see levels of 125 there with a stop loss at 112. As far as a few others go, just GMR is giving a fresh breakout above the levels of 13. It's still a very beaten down counter, so we could see short-term up moves towards levels of 1450, but I'd want to get out at 1450. I wouldn't want to hold it on for too long. As far as a few others go, like RCOM and BHEL, RCOM is seeing slight up move. However, I'm not too comfortable with the chart pattern on a weekly time frame, so I'd want to avoid it. And BHEL also, for that matter, is trading sideways. So until we don't get above levels of 135, I want to stay away. Khaitan is trading at upper circuit for 2 days in a row, and it's broken out above levels of 46, which was previous swing high. So we could see it may move up to levels of 53 to 54. There could be a little bit of further upside on Khaitan.
Navneet, any of these counters, and even within the auto pack, I just want to get a take from you, because we're going to watch out for sales numbers today as well. We're in the middle of the monsoon, so lots of attention that will continue there.
Well, autos, they have seen a very strong rollovers, and those stocks that come to my mind immediately is the stocks likes of M&M, which is threatening to break out about its lifetime high somewhere near to 1430 odd levels. That stock seems to be on the traders' limelight. And the second stock is again Hero MotoCorp, which is near its cusp of a higher breakout about 3200 levels. So I'd be watching all these two stocks on the long side. Any material dip, I would be looking to get into it, and in fact, if it started to break about 3200 levels, I would be more comfortable going long on the Hero Moto at the current levels as well.
All right, Ruchit, any of the auto names on your radar? Another theme that we saw play out yesterday was some of the power names. We were talking about BHEL, a whole host of other stocks from that space that were also running up yesterday.
Yeah, so from auto sector, I think we are quite positive on Mahindra and Mahindra. On the week, if you observe the weekly charts, then definitely it is giving a breakout from a 1.5 years of consolidation phase. And you see at the line charts, the closing charts and the breakout is already there. I think the positive momentum would continue in this stock. So even at current levels, we are advising to buy M&M for a target of 1513 short term. So keeping a stop loss below 1375, one can go long on M&M for target 1530. Among the power sector, as you said, BHEL in amongst the other stocks, BHEL, although from short-term momentum perspective, the stock might go higher up to 134, 135 levels. So even if you are looking only from trading perspective, then BHEL is good. From among the strategies, we have another buy call in REC also. We have seen after a consolidation phase, the stock has now started forming this high tops and high bottoms in the daily charts again. So from momentum perspective, we are expecting the stock to go higher up to 185. So one can look to go long on REC, keeping stop loss below 165 and target of 185 from this power finance sector.
Navneet, we've broken some very critical levels. So if you go back on the charts, really, I mean, with some kind of resistance at maybe 84, 84.20, the charts almost look like there is very little resistance right up to 8700 and maybe on the Bank Nifty till about 19500. Your thoughts on that, Navneet? Could you then just straight play an option both on Nifty and on Bank Nifty and just flow with it?
Well, it would make sense because what happens is since we are trading at a benign level at the options volatility, we are trading almost at a 16 odd levels, which is historical mean level. So if you are able to catch the trend right on the right side, so the delta moves are so fast that the option prices can move very swiftly. So the best strategy that one should be adopting in the uptrending market is basically the bull call spreads works very well, whereby I have a strategy on Bank Nifty. One can initiate that strategy at the current market prices as well. Going long on 18,000 call options and simultaneously selling in 18,500 call options for the monthly expiry on the Bank Nifty. The current spread is somewhere near to 200 points, and would expect that if we see a 500 points move upside from the Bank Nifty from the current levels, the spread can swiftly move towards 350 odd levels. So that's one strategy with a stop loss of 120 on the lower side on the total spread. One can initiate this strategy. Apart from that, going long on plain vanilla call options in an uptrending market would make sense because the options volatility on the call side is quite low. And what we have seen is the put writers, they are getting much more they are venturing much more attractive because the put levels the floor on the markets are keeping on the higher side. So if you look at the last series, 8,000 and the July series as well, 8,000 put options have started to hold on almost 40 odd lakh shares at the start of a series, which normally doesn't happen. So the put writers' confidence is still there in the market, and it's giving them confidence that the market will keep on forming the higher base, and on the series what we can expect is 8,500 levels to be touched is looking likely from the options traders perspective.
All right, let's take another very quick break. We'll come back. We've got lots of other stocks to talk about as well. Remember, JP, Ultratech, ICICI are also in the news today with Ultratech's 16,000 crore JP deal coming across some hurdles. We'll talk to our guests about that as well.
Thanks for staying with us on Street Smart. Let's take a look at the Nasdaq's one-year chart. We want to see if that we are having some major breakouts there, and also we have a FTSE one-year chart, and then we'll come. So Nasdaq actually still has some way to recover, maybe around 4,900, 4,950 before it breaks out. So the charts aren't looking that great for global markets, and here's the FTSE for you. Here, actually, they seem to be breaking out from a resistance, so this one is looking much better. Anyway, just if you're following up, and can we just bring up Hang Seng and Nikkei and just see how the markets are today, just to get a perspective of how we should be opening at the moment. Navneet, one of the things that we're seeing on the futures side is the momentum in some of the stocks that is coming hasn't seen the participation of a Reliance. So some of the heavyweights haven't even participated in this rally as yet. Could we see that happening? Could we see some kind of a rotation that makes, Reliance or some of the 2 or 3 other bigger heavyweights now take the index up?
Well, it's a very difficult call to make at this point of time because the data points are not that suggestive that the sector rotation has started to see. The merits at this point of time is keep on chasing the stocks, at least from a trading perspective, those who are and those who are making life highs, and because there is less amount of supply on the higher side, and the chart patterns as well as data patterns are quite supportive. So to be a typical example would be going long some cement stocks, whether it's been Ultratech, Gracians, all of them are making fresh life highs and making suggestive that the momentum on the higher side might continue. The similar the patterns like likes of private banks, which has seen the leadership and might and continuing the pattern on the higher side. So the likes of HDFC Bank as well as Yes Bank. So these stocks make sense to be on the long side, but making a broad call that sector rotation or the pharma or IT or somewhere the Reliance has started to participate on the higher side, they are still I guess the material data points are not that supportive enough to make that broad call.
Let's bring up Navbharat Ventures. Yesterday we spoke to the management and management specifically said that they are going to give a bonus. When they are going to give the bonus or how much is the quantity. I mean, they said they'll put it on the board this time, but they didn't mention how much the bonus could be. So that stock, you saw that move coming through. Can we just also bring up a 1 month chart on a 3 month chart if you have on Navbharat Ventures? And then also if you can just bring up NITCO, Madras Fertilizers and MK. EMKAY. Maybe that's all the time we'll have before the markets open. Your thoughts? NITCO seems to have been on 90-degree vertical rise. If you've seen Navbharat, NITCO, MK and Madras Fertilizers.
Well, to start off with, MK is just trying to give a fresh breakout. However, I'd like to get it past 68, so we'll avoid that for now. NITCO's in a really strong uptrend. It's seen a really good up move, and this can continue to move higher towards levels of 75. So one can get in here. Good trailing stop loss on NITCO would be levels of 62 for targets of 75. Navbharat Ventures also has seen a good up move, and this also could continue to move higher towards levels of 260. So this is a buy with a stop loss at 225 for targets of 260. MK, no, the last one, which one was you said? Sorry, I can't.
MK, NITCO, Madras Fertilizers.
Madras Fertilizer, right. Madras Fertilizers also has seen a good up move. However, there are supply zones around 20, so I want to avoid it. Maybe not the best entry point here.
All right. Richard, let's get a few more stocks going. What else is on your radar this morning? And a couple of the names that we were just talking about also in the kind of metal space, cement, and these are some pockets where we've been seeing activity building as well.
I think auto and cement would be the 2 sectors where one should continue to focus from a short-term trading perspective. Auto stocks specifically, if you see, then there is a continuation of this high top high bottom formation after last week's corrective move. So I think Hero MotoCorp would continue to do well, which is definitely on the up move. The volumes have again started increasing. So whenever the stock is going up, the volumes are higher, and when the correction is there or the prices are going sideways, then the volumes tend to be lower. So I think Hero MotoCorp would be one of the preferred pick. Hero MotoCorp, Bajaj Auto, even TVS Motor after yesterday's breakout from a consolidation looks to been doing well. And among the cement pack, Ambuja Cement, Ultratech Cement would be the 2 stocks to watch to trade on the long side.
All right, pre-open on your screen. So 83.44 and looking good right now, showing strength. The 27,000 on the Sensex. And let's just quickly take a look at the currency as well as it opens. Okay, the Sensex is now looking a little dicey. The currency is at about 61.5, so that's appreciating as well, and that's been looking steady over the last couple of days. The Nifty is still holding forward, so we'll just wait for some of those quotes to equalize. But let's take a look at some of the auto, cement names, as well as, of course, names that have been running up this week. So Bosch, BHEL, for example, and NTPC, and just see if any of those continue to move today. Tata Motors, Tata Steel, let's see where the action's coming in. So NTPC is still seeing some amount of buying coming in. And let's also take a look at the banks, SBI, ICICI, A lot of news across the banking pack as well. ICICI may take over JP's assets. Okay, just about a 0.3% uptick, so not too much there. Still waiting to see where the uptick is coming from then, Ashu, but we'll just keep running through those quotes.
One of the things that really baffles me now that our stocks are running up, and here is a bank that has to go around possessing assets, and the market's actually happy about it. It's beyond my comprehension how that can be a good thing. That goes to show you have a bad debt, and if you start possessing everybody's assets, well, I've not known bankers to know how to run companies. So anyway, just be careful, because some of this stuff, we're reacting the wrong way to the information that's coming through to us, well, that happens when the market has just a clear direction. So as far as the Nifty is concerned, really we don't have any consequential resistance to talk about as long as it continues like this. So it could be any level. And if you look at the structure from yesterday, the rally doesn't go through the full day. What I've noticed is that we watch for UK, the European opening, and then really start that big move. But let's keep watching and see what happens as far as that's concerned. Can we just take a look at so Tata Motors? That's a stock I'd like to watch out for, because we were talking about some of the data on car sales and all. Perhaps maybe all the charts are not technically clean. But certainly we keep a watch on Maruti, Tata Motors, TVS. Maybe there's a breakout coming through, but at the moment it's not visible as yet. What, any thoughts?
Well, primarily just on the index, I just wanted to make a point. We've moved up from 7950 zones to 8300. That's 350 points. And on the upside, maybe if this rally continues with good steam, we reach 8600. So purely from a risk to reward point of view, you're risking 350 points or 300 points on the upside. Unless you're trading from a very short term point of view, where you're trading for the day or for couple of days, it's fine to trade long and have tight stops, but to trade from a positional point of view and enter fresh out here is not really sensible, because your risk to reward is more or less than 1:1 also. So taking fresh longs, stop loss should be 8240 on the Nifty, and on the Bank Nifty 17,800, but stick to those stop losses in case you get taken out. It's time you close your positions on the long side.
Okay, what's your take on some of the IT names? Navneet, KPIT today already sounding a bit of a warning going ahead on the next couple of quarters. We've had some of the other majors correct marginally over the last series on the back of fears with regards to the UK and EU market. What's your take in terms of the kind of activity you see in these stocks?
Well, IT, to my understanding, would continue to remain sideways to more corrective. Whether it's been a large cap IT space or whether in the mid cap space, KPIT has been in something different sphere. It has seen a tremendous rally in the off late, but at a level somewhere near to 190 to 195, it started to find a lot of resistance on the higher side. So to my understanding, it might if these levels have not been taken out, we might see some kind of a material pullback. But the overall, on the general, the likes of TCS and NFI, what we have seen is in the last day or so, we have seen some kind of a short covering action on the TCS on the back of the short rolls happening in. To my understanding, the material, the trade would be better to be the sell on rise on this entire IT pack on the whether it's in large cap space. Whether it's been Infosys somewhere into 1190 to 1200 zone, I would be looking to sell with a stop of 1220 on the higher side. Similarly on the TCS, it's not looking likely that comfortable. The data is not that comfortable to be on the long side. It's either from a trader's perspective, either go short on the rallies or either at this point of time avoid the sector as a whole.
What about some of these pharma names as well, Navneet? Constantly in the news for some development or the other, but do you feel that it makes sense to get into some of these stocks even as a defensive play right now?